This is the Friday, December 27th, 2013 version of the Market Plus segment. Joining us again is Jamey Kohake. Jamey, welcome back.
Thank you, Mike.
Now, during the show, we had talked a little bit about the cattle industry and what's happening with beef around the world. Was there any clarifications you wish to make?
Just one. When I said Japan, I meant South Korea. The lights in here are a little hot and got the countries mixed up.
It's understandable. I make a mistake a week, and we want to keep Twitter followers happy.
You bet.
It's all about. Now, going on another topic we didn't get a chance to discuss on the show was cotton. Saw a little bit of rally in cotton. Where do you see the cotton market headed?
I actually like selling into it. 84.90 area for the March contract. I'm a little bit leery of the export business. That's where a lot of this rally has came from. And if China doesn't, kind of keep their foot on the pedal for the exports, I can see this backing off. So I've been kind of wanting to take some profits and even looking at getting short right shy of 85 for the March.
All right. Now, how does planting intentions look for cotton here as we roll into 2014? Are we seeing a lot more cotton acres go into beans and other crops?
I don't think it's really been decided yet. I think we're waiting to see how much moisture we see down in the Delta. I think it would be a last-second type deal down there, too, to see if we can get a rally yet in the beans, for them to see what type of margins they can get then, too. Certainly. All right. Now, as you mentioned, Canada, as it relates to cotton, is a big story. China is a big story as it relates to cotton. Phil in Canada is curious, are the Chinese cancellations of DDGs, those related to the MIR 162 unapproved GMO corn, are they deliberate, convenient, or real? How are the Chinese playing this controversy? I think it's a great question. I like the convenient answer. To me, it seems like a game for them right now. I still think we need to do some type of trade regulations with them. When you make a purchase, there are some penalties for these rejections. We go through this every year, pretty much starting in mid-January till March with the soybean market. They buy, wait and see what South America has, cancel, and come back or not. So I think there needs to be some type of, they have to pay for half the load or a third of the load or whatever. But I think it's convenient right now, and they want to see if they can, move the board around.
And the goal is just to push prices lower, and they know they've got the purchasing power to make this happen.
Exactly.
All right. Mm-hmm. All right. Now, how is the market interpreting this? Does the market tend to see it as a convenient?
Not really. It was a big mover when it came out. The meal market fell apart, spilled over into the beans, spilled over into the corn market as well. It could be up around 5 million metric tons, which is a pretty decent amount. And you start, adding that back onto the balance sheets, it could be a big shaker for the meal demand, meal futures here coming into spring, summertime.
You bet. Yeah, that would have an effect for the next 6 months.
Oh, yeah, absolutely. Mm-hmm. So there's something to watch out for, and hopefully it is just a quick game of manipulation, and they do take another load and make up for it.
And the story is they're going to try to slow us down. China could have that strand of corn approved by April,
right?
If I'm correct. Mm-hmm. So that's sort of the end point of when this could fade into the background, potentially.
Mm-hmm. Yeah.
All right. Now, we've got a question from Zach in Cedar Rapids. He's curious on the stock market's next move. We touched on it briefly at the start of the show. He says you were pretty bullish back in mid-November last time we had you on, and you've been proven right so far. So a little feather in your cap. He wants to know, can the equity market continue the Christmas rally into 2014?
Well, I think for sure it can. I think a lot just depends on money flow right now because we're so far stretched to the top side of the bands pretty much. But the reason I'll keep going higher is because everybody's trying to pick a top right now and outguess the market, so they'll go and flush them out. And once that happens, the top work will occur. But as of right now, I think there's still more upside.
We're not there yet, and there's no other compelling story out there to suck money out of equities.
There's not. Really, the only bullish story right now in ags is in the cattle market. And the cattle market is not known for a huge amount of open interest relative to the grain markets where, there'd be huge, fund money in corn or beans for the summer months. The cattle's feeders and live cattle don't really see that much.
Have we seen an increase in open interest in the cattle market since this rally started last May to June?
We have at times. It hasn't been steady. Just close your eyes and keep piling on like sometimes we see in the grain market.
Okay, there's no August of 2012 spike like we saw in corn. That gigantic spike in open interest in the corn market.
Not a steady one.
Okay. Mm-hmm. All right. Now we've got another question. Phil in Canada. Again, he's very curious this week.
What do you expect from the USDA on January 10th? What are we going to see? More corn, more beans, demand going to increase? What does the market anticipate?
I think the market is anticipating a bearish report, but I think it's been talked about so long that a lot of it is in the market right now, and guys have pretty much talked themselves into a bearish report too. I could see the report being bearish, but not bearish enough to make the bears happy, so there's short covering and we go on higher, short term. It's not a permanent low set in place, but we could see a little bit of some short covering upwards.
Now, as we watch on January 10th, what sort of numbers do you think we're going to be benchmarks for the market? What are we anticipating to drive us one way or the other?
My number I'm going to watch all the way till next summer is the carryout number. I think we can play the yields, half up, half down, on that. But this 1.7 to 1.9, whatever, 1.8, I think that's the number to watch out for. And can we keep up this 1 million metric ton per week export figure two to start eating away that? Then of course the big wild card is the RFS. How does that play out next year? So there's a lot of wild cards to be played out with this 1.7, 1.8 carry out.
Now, as we mentioned the RFS, we have seen ethanol continue to be very profitable with the RBOB being so high and with corn prices hovering in that 4.30. How long do you think that's going to continue? I mean, what is the market anticipating for ethanol production regardless of RFS?
Yeah, we've seen some good margins, but the last few weeks we've seen that margin dwindle down even more. On the numbers that came out today, the margins have shrunk. They're still positive, but they are shrinking.
Okay.
But I think that's the big wild card, because at times the last several years we've been up around in the high 30s% wise of the total corn crop.
You bet. Now, as we take a look over at the dairy market, we saw a big rally last week, $1.12, a big jump last week, a little bit of a sell-off this week, 17 cents in the Jan, 23 cents in the Feb. Where do you see the dairy market headed?
I'm a little bit bearish coming into January on the milk market. I see cheese getting very weak and that pulling the milk market down. So if we could retest these highs that we saw, I'm looking to get short or even sell some calls. I'm really leery of the cheese market pulling the milk down sometime in January.
So watch 1950 to make some sales to make that a point?
Yeah, up near close to 20 with a stop close up over 20.
Okay. Now, why do you feel the cheese market's going to fall apart?
Supply-wise, and a little bit of demand weakening too.
Ending the holiday season, the meat and cheese trays dwindle.
Exactly.
All right. Now let's talk gold. We haven't talked about gold on the show in quite a while. We did see a little bit of a $10 run up this week. Where's the gold market headed in light of the taper, in light of the new year, in light of everything that's going on?
Yeah, we've actually seen some good positive economic news here the last few weeks. Gold did see a big sell-off after the taper news came out and QE talk being over with, so that did flush some money out. But I actually think we put in a short-term low. I'm looking for the Fed to retrace back up around the 1248 mark. That's where some good resistance is. Dollar stays weak. Like I said during the show, gets back below 80. I can see gold, 12.5 area. We need some more news to get through that, but I could see a $30 rally just on some short covering.
All right. Well, now, before we let you go, Jamie, as we head into the new year, what is your trade of the week? What is looking good?
Coming into next week, despite another lackluster volume type week and a short week, if we can retest this week's hog lows for February, I like selling those Feb 83 puts.
Get those puts in at 83.
Yeah, if we can hold the lows, retest it on Monday, Tuesday, and it holds, I'm going to come in and sell some puts.
All right. Well, thank you so much for being with us, Jamie. And thanks to all of you for submitting your questions via Facebook and Twitter. Please continue to do so. We'll continue to get expert analysis. Thanks for watching, and we'll see you next year.